There's a version of you that probably thinks you're just one good strategy away from becoming profitable. You think maybe the right indicator will finally make everything click. Maybe the right mentor. Maybe the right course. Maybe one more YouTube video. Maybe if you could just understand market structure a little better, find the perfect setup, or finally learn how the professionals think, everything would change. I understand that mindset because I used to think the same way. There was a point in my trading journey when I had to look my mother in the face and tell her that I had lost the money she had given me. And that wasn't just money she had sitting around. She had actually taken out a loan because I had convinced her that I could turn $1,000 into something meaningful. Imagine carrying that pressure while simultaneously watching trade after trade go against you. Loss after loss. Mistake after mistake. And the hardest part wasn't even the money. It was realizing that I didn't have anyone around me who could tell me what I was doing wrong. I didn't have a wealthy parent who traded. I didn't have a personal mentor. I didn't have a private community I could lean on. I didn't personally know a single person who had successfully done what I was trying to do. So I had the internet, Twitter, Reddit, YouTube, and a very expensive collection of mistakes. That's how I learned. I kept studying, kept trading, kept losing, kept making mistakes, and kept trying to figure out why. Eventually, things started to make sense. Years later, I can look back and say that I learned far more from those difficult moments than I ever could have learned from simply watching someone make money. And that's exactly why I want to talk to you about these lessons. Not the recycled advice you hear in every trading video. Not the glamorous version of trading. The uncomfortable stuff. The things that can save you years of confusion, thousands of dollars, and a lot of unnecessary frustration. Because if somebody had sat me down early in my journey and explained these things, I genuinely believe I would have saved myself a lot of pain. So let's get into it. Lesson 1. Buying a course doesn't make you a trader. Let's start with something that might sound ironic coming from someone who teaches trading. Paying for education does not automatically make you educated. And paying more does not automatically make the education better. You can spend thousands of dollars on a mentorship. You can pay hundreds every month for a private trading community. You can buy indicators, signals, courses, coaching programs, and every shiny trading resource you can find. And you can still be completely unprofitable. Because there is a dangerous assumption that happens when you spend money on education. You start feeling like the transaction itself should produce the result. You think, I paid for the course, so now I should become profitable. But that's not how learning works. If you pay for a gym membership, you don't automatically become fit. If you pay for university, you don't automatically become successful. And if you take someone out on an expensive date, you're not guaranteed a relationship afterward. The same principle applies here. Education gives you access to information. It doesn't guarantee what you do with that information. And there's another issue you need to watch carefully. If someone tells you that buying their program guarantees that you'll make a specific amount of money, that's a major warning sign. Nobody can legitimately promise you that trading will produce a particular financial outcome for you. So before you give someone your money, investigate them. Look at their experience. Look at their results. Look at how they teach. Ask yourself whether you're learning from someone who actually understands what they're doing, or someone who simply understands how to sell the dream. I learned this lesson personally. Early in my journey, I became very skeptical of trading communities because I had already paid for programs that weren't actually helping me. At one point, I was paying a significant monthly fee for access to a community and barely even had meaningful interaction there. And I remember thinking, why am I spending all this money when I'm actually learning more effectively by studying and practicing on my own? That's why I didn't immediately create my own community. I waited until I'd spent years trading before I felt comfortable doing that. The lesson isn't never buy education. The lesson is to stop believing that purchasing education is the same thing as becoming skilled. It isn't. And that brings us to the second problem. Because once people realize that buying one course didn't solve everything, they often make another mistake. They start consuming everything. Lesson 2. Watching more trading videos doesn't mean you're learning more. You can spend an entire day watching trading content and still learn almost nothing. You can watch 10 videos, then 20, then 50. You can know every acronym, every concept, every buzzword, every strategy, and still have absolutely no idea what you're looking at when you open a live chart. That's because watching information and understanding information are two different things. You might feel productive because you've been studying for 6 hours, but the real question is, What can you actually do now that you couldn't do before? Let's say you watch a lesson about market structure. Don't immediately jump into another lesson about liquidity, fair value gaps, support and resistance, order blocks, or whatever concept comes next. First, go to your charts. Can you actually identify market structure? Can you repeatedly recognize higher highs and higher lows? Can you distinguish them consistently? Can you explain why you're identifying them that way? If you can't, then watching 6 additional concepts probably isn't going to help. You're just stacking new information on top of an unstable foundation. Think about learning a language. You don't begin by memorizing complicated conversations. You start with sounds, basic words, simple structures, then sentences, then conversations. Trading works the same way. You need concepts to become familiar enough that you can recognize them naturally. Otherwise, every new concept competes for space in your head. You end up looking at a chart and thinking, is this market structure, or support, or a fair value gap, or something else? And suddenly you've learned 10 concepts but can't confidently apply any of them. That's not a lack of intelligence. It's a lack of processing and application. So don't measure your progress by how many videos you've watched. Measure it by what you can reproduce on a chart. Because 10 hours of content that never becomes practical knowledge is still 10 hours gone. And eventually, you realize something important. Money can come back. Time doesn't. I would rather recover money than recover wasted years. So study, but give your brain time to actually absorb what you're studying. Lesson 3. Discipline can destroy or save the best strategy. Here's something I wish more traders understood. Sometimes your strategy isn't the problem. You are. And I don't mean that as an insult. I mean that your behavior can completely destroy a perfectly reasonable trading system. Imagine you've created a rule. 2 trades maximum per day. Simple. Clear. You take your first trade. It loses. You take the second. It loses. Now you're frustrated. Instead of closing the platform, you tell yourself, just one more. Then another. Then another. Soon you've taken 10 trades. At that point, it doesn't matter how good your original strategy was. You abandoned it. That's revenge trading. And it doesn't usually begin with a dramatic decision. It begins with a tiny exception. Just this once. I'm already down. I know the next setup is going to work. I need to make the money back. And suddenly you're no longer executing a strategy. You're reacting emotionally to the previous trade. The same thing happens when you become greedy. Maybe you're already up significantly on a position. Your original plan says to take the profit, but then you think, maybe I can squeeze a little more out of this. So you hold. The market consolidates. You continue holding. Then the profit starts disappearing. Now you're thinking, I was already up so much. It has to come back. And the trade keeps moving against you. The same psychology appears on losing trades. You have a stop loss. You know where the trade is invalidated. But when price gets there, you think, I can't afford to lose this much. So instead of accepting the planned loss, you move the stop or remove it. Then price falls even further. Now you're down twice as much. And instead of admitting that the trade is invalid, you think, well, I'm already down this far. I might as well wait. That's how bad habits become normal. You stop following the system because you're emotionally attached to the outcome. And eventually, you aren't trading your strategy anymore. You're trading your hope. This is why discipline matters so much. A strategy only exists on paper until you repeatedly execute it. Your ability to follow your own rules is part of your edge. Lesson 4. Your chart doesn't control the market. This is one of the biggest mental shifts you can make as a trader. Your analysis doesn't move price. Your drawings don't move price. Your indicators don't move price. The market does not care that you found a beautiful setup. You could cover your entire chart with moving averages, rectangles, trend lines, arrows, zones, and annotations. Price isn't going to look at your chart and say, wow, they marked this level. I guess I should move there. That's not how markets work. Your job isn't to make the market obey your analysis. Your job is to understand what is actually moving the market. That means learning price action, understanding what happened previously, understanding how price behaves, understanding momentum, understanding participation and volume. Because sometimes you can have what looks like a textbook setup, and it still doesn't move. Maybe you've identified a rising wedge. Maybe there's a double top. Maybe there's a support level. Everything appears perfect, and then nothing happens. Why? Because the market may simply lack the volume or momentum necessary to produce the move you're expecting. Markets can be active. They can be slow. They can consolidate. They can sit there doing almost nothing. And that's important because you don't want to respond to every failed setup by assuming your entire strategy is broken. Sometimes the setup was fine. The conditions simply weren't there. So instead of asking only, did my pattern work? Ask, what was happening underneath the pattern? What was price doing? Where was the momentum? Was there enough participation? Was the market actually moving? The lines on your chart are a representation of your analysis. They are not the force driving the market. Learn to read what's behind those lines. That will take you much further than endlessly adding more lines to your chart. Lesson 5. Stop letting dollar targets control your trading. This one is subtle because financial goals sound motivating. You might say, I want to make $100 a day. Or, I want to make $3,000 this month. Or, I want to make $1,000 every trading day. There's nothing inherently wrong with wanting those things. The problem starts when the number becomes a requirement. Because once you decide that you absolutely must make $1,000 a day, you're no longer simply looking for good trades. You're looking for money. And those are two completely different objectives. Suppose you're having a great day. You're already up $700. Your plan was to stop after a certain number of trades. But your target is $1,000. Now you start thinking, I'm so close. So you take another trade. Maybe it loses. Now you're back down. And because you were green earlier, you become desperate to get green again. Another trade, another decision, another emotional reaction. And suddenly the $700 you could have walked away with is gone. You may even finish the day negative. That's what numerical targets can do when you become psychologically attached to them. The goal was supposed to motivate you. Instead, it becomes a reason to violate your process. And sometimes the most frustrating thing is what happens afterward. At the end of the day, you look at your trades and think, why did I do that? Why did I take that position? Why didn't I just stop? It's almost like you weren't thinking clearly while it was happening. That's why I would rather have you focus on executing your process while then forcing the market to give you a specific dollar amount. Your job is not to manufacture $1,000. Your job is to identify whether your setup is present and execute appropriately. If the market gives you $700 according to your plan, that's still a successful execution. Don't turn a good day into a bad one because you're obsessed with completing a number. Lesson 6. Give yourself time. Social media has completely distorted people's expectations about trading. You see someone saying they became profitable in a few weeks. Someone else claims they bought a luxury car almost immediately. Someone says they quit their job after a short period. And then you look at your own progress and think, what's wrong with me? Nothing. You're comparing your real journey to someone else's highlight reel. I always believe it's important to remember that people's timelines are not universal. Some people become consistently profitable within months. Other people take years. And that doesn't automatically mean one person is smarter than the other. There are too many variables involved. Even the environment in which someone starts can influence their experience. When I started, I was young, and the money I was trading came from a stimulus payment my mother had given me. I didn't psychologically treat that money the same way I would have treated money I had worked extremely hard to earn. That changed how I approached the risk. So when someone tells you, I did it in 3 months, so you should be able to do it in 3 months too. Be careful. That's their timeline, not yours. Think about professional education. If you decided to become a nurse, you wouldn't enter a multi-year program and become angry because a hospital didn't hire you halfway through your education. You understand that becoming qualified takes time. Trading deserves that same patience. And there's another reason. Even if you become profitable for 3 weeks, that doesn't necessarily mean you've mastered trading. What happens next month? Next quarter? Next year? Can you repeat that performance? That's the real challenge. You aren't trying to win for 3 weeks. You're trying to develop something sustainable. So don't put a deadline on your trading journey. If you tell yourself, I must quit my job next month because I need trading to work, you are putting yourself under enormous psychological pressure. Now, every loss matters more. Every missed opportunity matters more. Every trade becomes emotionally loaded. And that's when people start forcing trades, over-leveraging, abandoning discipline, and treating the market like a rescue plan. At that point, you're not approaching trading like a skill. You're approaching it like gambling. Give yourself permission to learn. Give yourself permission to discover whether you're actually suited for this. And if you cannot afford the time required to learn properly, you need to seriously reconsider whether you're ready to make trading your path. Lesson 7. You don't need to become a trading guru immediately. There's another strange pressure that exists online. People start trading for a few weeks and immediately feel like they need to sell a course. Please don't feel like you have to do that. You don't need to become a teacher just because you've discovered a strategy that seems to work for you. Think about how quickly the experience gap becomes obvious. Imagine you started trading in June. Then in July, you launch a course. A student asks, "What usually happens in December?" And you have never traded through December. How are you supposed to teach something you haven't experienced? There's nothing wrong with eventually teaching, but there is a difference between sharing what you've learned and positioning yourself as an authority before you've had enough time to develop real experience. You don't need to monetize every stage of your journey. You can simply learn. You can trade. You can make mistakes. You can improve. And you can let your experience compound. There is no rule saying you must sell a course 2 weeks after discovering trading. Lesson 8. You don't have to bring everyone into your journey. Not everyone needs to know that you're trading. And honestly, that could be a huge advantage. Trading has a terrible reputation for a reason. A lot of people genuinely do gamble with their money. They over-leverage. They risk money they can't afford to lose. They hold losing trades. They chase losses. They expect to turn tiny amounts into enormous fortunes in absurdly short periods. And unfortunately, there are also people who exploit that desperation by selling expensive programs and making unrealistic promises. So when you tell people you're learning to trade, they may immediately assume you're gambling. And I don't necessarily blame them. They've seen the same things you have. They've seen people blow accounts. They've seen scams. They've seen unrealistic social media claims. They've seen people sell dreams. So if you're someone who is heavily affected by other people's opinions, consider keeping your journey private. You don't need everyone's approval while you're still building, because negative comments can get into your head. Someone says, "Trading is a scam. You'll never make it." That's basically gambling. And even if you were previously confident, you start questioning yourself. Now you're carrying someone else's opinion into your next trade. That can affect your decisions. I experienced this myself. There were periods where people didn't understand what I was doing. But later, when the results became visible, the attitude changed. Suddenly, people who had never been interested wanted to know how everything worked. People who hadn't checked in before wanted to meet up. They wanted advice. They wanted to learn. That's just how people can be. They often have an opinion while you're building and a completely different attitude once the result becomes undeniable. So don't build your trading journey around proving people wrong. You don't need to announce every step. You don't need to defend yourself. You don't need to convince everyone. Sometimes silence protects your focus. Lesson 9. Learn from your losses instead of letting them define you. One of the hardest parts of trading is accepting that losing is part of the process. I know what it feels like. I've been there. And when you don't have someone experienced beside you saying, "This is normal. Here's what you're doing wrong," every loss feels like evidence that you're failing. But losses can become information. They can show you where your process breaks. Maybe you're entering too early. Maybe you're chasing. Maybe you're ignoring your rules. Maybe you're holding positions because you can't emotionally accept being wrong. Maybe you're consuming too much information and not practicing enough. Maybe you're forcing the market to meet your expectations. The important question isn't simply, "Did I lose?" The question is, "What did this loss reveal?" Because if you learn from the mistake, the loss can become part of your education. If you repeat the same mistake without reflection, you're just paying for the same lesson again. And that's exactly why I wish I had someone early on who could have told me, "Don't make this mistake. Here's what I learned the hard way. Here's what I would do differently." That's what good mentorship should actually provide. Not promises, not guaranteed profits, not fantasy, perspective, experience, a shortcut around unnecessary mistakes. Lesson 10. Respect the process more than the lifestyle. This might be the biggest lesson of all. Trading can change your life. I've personally seen how dramatically life can look different years later compared with where you started. But don't let the lifestyle become more important than the skill that creates it. It's easy to look at luxury cars, expensive watches, vacations, beautiful homes, and financial freedom and think, "That's what I want." But those are outcomes. You don't build a sustainable trading career by chasing the appearance of success. You build it by becoming the person capable of handling the process. The discipline, the patience, the repetition, the boring days, the losses, the periods where nothing happens, the days when your perfect setup doesn't work, the moments when you have to walk away because the market isn't giving you an opportunity. That's the real work. And honestly, that's why I care about teaching these lessons. Not because I want you to believe trading is easy. It isn't. Not because I want you to believe everyone can become rich from it. That's not realistic. And definitely not because I want you to think you need to buy some expensive program to have a chance. I want you to understand what trading actually demands. Because when I look back at where I started, I can barely recognize the person who was trying to figure everything out with nothing but internet videos and expensive mistakes. There was no guarantee that things would work out. There was no certainty. There was just a willingness to keep learning. And eventually, the pieces began to come together. So if you're currently struggling, don't automatically assume that you need another strategy. Maybe you need more practice. Maybe you need fewer distractions. Maybe you need to stop consuming and start applying. Maybe you need more discipline. Maybe you need to stop chasing a dollar target. Maybe you need to stop comparing your timeline to somebody else's. Maybe you simply need time. And if you decide to learn from someone, that's okay too. Just vet them. Make sure they're legitimate. Look at their experience. Be skeptical of guarantees. Don't confuse an expensive product with a valuable education. And remember that nobody can do the actual work for you. A mentor can shorten the learning curve. A course can organize information. A community can give you support. But eventually, you're the one sitting in front of the chart. You're the one deciding whether to enter. You're the one deciding whether to follow your rules. You're the one who has to remain disciplined when you're emotional. That's why the trader you're becoming matters more than the strategy you're currently using. And if you're willing to give yourself the time to develop that person, your journey can look very different. I know that because mine did. 5 years can feel like forever when you're standing at the beginning. But when you look backward, you realize how quickly those years passed. The losses mattered. The mistakes mattered. The confusion mattered. Even the moments when I thought I was completely wasting my time mattered. They all became part of the process. So if you're somewhere in the middle of your journey right now, don't let one bad week convince you that your entire future is decided. Keep learning. Keep practicing. Stay skeptical. Stay patient. Protect your discipline. And most importantly, don't let somebody else's timeline convince you that you're behind. You're building a skill, and skills take time. If this video helped you, let me know in the comments which lesson hit you the hardest. And if there are other trading lessons you'd like me to break down, tell me what you're struggling with. Because there are plenty of things I learned the hard way that I wish someone had explained to me much earlier. And if you're looking for a teacher or a mentor, do your homework first. Don't just trust somebody because they have a nice lifestyle, a big following, or a convincing sales pitch. Verify them. Vet them. And remember what I said at the beginning. Paying for information doesn't guarantee that you'll become profitable. Watching thousands of videos doesn't guarantee that you'll become profitable. Finding a strategy doesn't guarantee that you'll become profitable. What matters is what you do with what you learn. Because eventually, the market doesn't care how many videos you've watched. It doesn't care how much your course cost. It doesn't care how badly you want to hit your monthly target. It doesn't care what your friends think. It only gives you the market that's in front of you. And your job is to meet that market with preparation, patience, discipline, and humility. That's the game. And if you're willing to play it that way, you give yourself a much better chance of surviving long enough to actually become good at it. I'll see you in the next video.